Welcome everybody to Banana Bread Trades. My name is Goose. It is Wednesday, December 14th, and the stock market is on edge of uncertainty. We have had CPI and FOMC in the last 2 days, as well as Daddy J Powell leaving us with a lot of questions. In this video, I'm going to try to answer some of those questions, as well as show you my forecast for the next coming months. So please stay tuned. I will try to keep this short because your time is valuable. Now, getting right into this, we have our Tuesday CPI release. The number came in at 7.1%. Now, this is extremely bullish. The previous number was 7.7%, so we're below that by quite a bit. We're even below the forecasted 7.3%. What does this mean? This means that inflation is falling faster than the Fed anticipated. Now, if you're new here and you don't quite know what CPI means or why it's important, I'll put this little graphic up right here. This shows you how it's calculated, what it means, but overall, it's just a measure of inflation. Now, initially, as you can see here, the markets acted extremely bullish. As you can see, the US dollar drops dramatically and the S&P 500 skyrockets. Now, all of that rallying really didn't last very long. As you can see here on this 1-minute chart, we pumped really hard, really quick, an hour before open when the CPI came out. Then, by the time market actually opened, we do nothing but sell off the rest of the day. And I mean, this is a lot of selling to retrace that entire move, right? And then when you look here at the daily wick, that's one of the nastiest daily wicks we've seen in a very long time. That is a trend-setting wick, which tends to leave a lot of questions. Then we have FOMC the following day. What is Daddy J Powell going to say to complement this here big old wick? So let's go ahead and get into what the report itself actually said. And we're going to focus on 3 key things from this report. The first being the 2023 Fed funds rate. It moved all the way to 5.1%. This is above the predicted 4.6%. Now, this is bearish because it's implying that rates will go higher than originally anticipated. Now, to add on top of this, the Fed funds rate range for 2023 moved to 5.1% all the way to 5.4%. This range is implying that 5.1% estimate is actually on the low side of now what they're predicting the rates to be. Now, the next thing on the list here is unemployment. Now, as far as inflationary purposes go, unemployment was actually bullish because it increased to 4.6 over the projected 4.4%. Now, this is good for inflationary purposes because it means inflation's coming down. It also sucks because more people are losing jobs. Next, we have GDP growth. Now, GDP growth was a big miss, right? It got cut all the way down to 0.5%. This is way down from the predicted 1.2%. Now, this could actually be indicative of recession, but not entirely, right? It is overall bearish sentiment, but in the speech, which we'll get into next, J Powell really didn't seem to have too much concern when it came to recession talk. Now, let's talk about some of the things that J Powell talked about in his speech and then afterwards when he was questioned by the press. Now, one thing that he reiterated a few times and was very clear about was that he had no intentions of cutting rates in 2023. Now, we do feel like he is a little pressured to say this because if he did imply that they did intend to cut rates in 2023, then that would probably send the market on a moon mission and just erase all the hard work they did on trying to slow everything down and get the pace to where it's at now. So he has to be careful when stepping around words like that. Also, he did not seem concerned about stagflation or recession when questioned by the press. This was a great opportunity for him to kind of elaborate on that and maybe say that he was concerned. But the fact that he totally backed off the question and basically said that he had no concerns about it, that shows us that he is happy with the current pace the market is at. That means that we're not overly bullish, not overly bearish, and it means they're kind of getting it under control. And now to me, the most important thing that I got out of this meeting that J Powell said, as far as long-term results go, is that he said if we can get 5 meetings in a row that all have positive CPI readings ahead of them, that we can consider ourselves on the downhill slope of the Fed tightening. So far, we've had 2 now, right? So that means that the upcoming ones in February, March, and May, if those are all good, CPI readings and all the other inflation factors seem to be under control in those 3 meetings, then the June meeting could actually mean real bullishness, real buying again. And that really goes in line with what we've been saying for a while, right? That mid-2023 is going to be the end of all this bear market doom and gloom type stuff, and we can go back into confidently putting our money in the stock market and not watching it just completely evaporate away, right? But most importantly, this just shows us that the Fed is on track, right? Because they've been saying for a while, mid to late 2023 is kind of when they want to have this under control, right? That's the optimistic look. And as it looks right now, they're 100% on track to do this. Now, Goose, right? You just told us all of this information about FOMC, CPI, J. Powell, and his dog, right? How do we actually use this information to make trades, or what should we think about doing, right? I am not a financial advisor, but I will tell you what my plan is going into these next couple months and years as far as intraday trading and my longer term investments. So intraday trading, especially for the next month, I expect to be relatively to the bear side with the potential of Santa rally. So one thing that I did notice today that our boy Kevin pointed out on Twitter is that we only have 3 big volatility market moving releases until the next FOMC meeting. And they're not until January. So that means our intraday trading for the rest of December will be pretty relaxed, should be nice level to level base hit trading, probably get slow around the holiday season, which is fine. The first report we're going to have, though, is on January 7th. That is the labor report, right? That's going to be our unemployment. Now, if this misses or exceeds expectations by a lot, you can expect probably a 2 to 3 day market directional move off of that, right? But I don't weight that one too heavily, right? The one I really weight pretty heavily is the CPI report on January 12th. If that one misses, it will be bloodshed, very bad, expect bear market, right? Because that throws our mid-2023 prediction out the window. That means rates have to be tightened and could throw the Fed's plans all off because inflation is, in fact, not under control, right? And then the last thing we will have in January is Q4 earnings. Now, Q4 earnings bring a lot of uncertainty. The market hates uncertainty, so you can expect the time leading up to that as well as the time through that to be pretty volatile. I imagine a lot of things are going to be getting priced in. Some moves might not make sense. Expect that time to be volatile, but maybe not give us too crazy of multi-day directional moves. Looking at this daily chart right here, you look at that wick and you're like, You look at the range, right? We're due for some pullback. I know it's been a really rangy uptrend, but it's still been an uptrend. We're due for a pullback. We're at the top of the range. I'm not buying calls or going just dumb long right now, right? If we break clean above the range, get above the wick, then yeah, gung-ho, Santa rally, let's go. But until then, I'm playing it cautious. I'm playing my intraday levels, and I'm more or less being safe and hitting base hits. Now, as far as the long term goes, right? I'm not putting a whole bunch of money into my long term stuff right now. I'm not buying calls right now. What I will be waiting for is for this trend to reset. As you can see, that low didn't test the bottom of the trend line, right? We got a lot of volume down there, a lot of volume. Then at the top of the trend line here, we got this wick. What I'm looking for is the next low. I want to see the next low get put in and give us a relative idea of what the new trend is going to be. My prediction is that the new trend is going to be either one of 2 things. It's either going to be a less steep downtrend or a very, very gradual uptrend. Not a bunch of buying straight up. That's what the Fed has been working so hard to keep from happening, right? So, as far as the long-term stuff goes, when we see another low get put in, right, we kind of maybe look like we're towards the bottom of the range, I'm going to start buying a lot of stuff again. Same thing. If we go ahead and just rip from here, I'll wait until we put in a solid low. We get a solid pullback. Then I will start investing some of my longer term stuff, maybe buying some longer term lead calls as well. But right at this point right here that we're at, I'm more or less keeping what I got and waiting for a good buying opportunity. I think we're in the area of buying, and if you just wanted to buy consistently over the next few months, that would work too, and you'd get a fine average. I think it's all hunky-dory. I'm just waiting for a better pullback to maybe go a little heavier on my investments. I'm still doing my monthly stuff, investing a little bit here and there. But as far as the heavy stuff, really wanting to get aggressive, I'm sitting patient just for a little bit until we kind of find a bottom of a trend line. This next few months, there's going to be some really good buying opportunities, and I want to be able to have plenty of capital available to take advantage of that. Well, that's all we have for today as far as market analysis goes. Thank you so much for watching all the way through this video. It's a lot of work and a lot of effort, so trust me, I really appreciate it. If you have any questions, please hit the comment section. I only have like 3 people that actually watch my videos, so trust me, I will see your comments, and I love talking with you guys. I love talking trading in general, obviously. But yeah, I'll link everything that I referenced today down below. And yeah, if you feel obligated to, please hit the like button. It helps me out a lot. So yeah. That's all we have for today, and until next time, eat banana bread and make money.